Yes, I think the French economy did comparably well over the last 2 years during a time when monetary policy has become more restrictive. In 23, France benefited still from quite a substantial fiscal stimulus, which helped France to escape a recession, which was more of a concern in other economies. So that is so far so good. France, like other economies in Europe, is of course challenged by some trends which are here to stay, be it geopolitical trends, be it the energy transition, or be it the demographic topics. So this is no difference to other European economies. But there is something, I think, which is clearly underestimated when it comes to people from outside watching the French economy, but also I think for the insiders, the French people themselves. I think France has been pretty successful in implementing some labor market reforms, which had the consequence that the labor participation rate is now at a record level. Very good news. France is attracting foreign direct investments. So there's not only talks about a startup culture, but I think really there is something going on which it attracts business and which is very encouraging for the French economy. So we do expect that the real estate markets will stabilize and improve from current levels. This is most likely the case for residential real estate markets, including also hospitality, and certainly also in the area of logistics. So someone once said it's sheds and beds where the recovery will happen the quickest. We do see some big investors, institutional investors, also showing some growing appetite. So we do expect that transactions will recover later this year, or now starting in the second quarter this year, supported by easier monetary policy, which is on the way, and supported by growing investors' appetite. We still continue to see inflation trending lower, so we see that the central bank's inflation targets are coming within reach. In the case of Switzerland, the inflation target is already met. For the UK and also for the euro area, this will happen in the second half of this year. Nevertheless, inflation will remain higher over the next 5 to 10 years horizon compared to the decade prior to the pandemic. We do expect that inflation will be on average some 70 to 100 basis points higher than in the 10 years before the pandemic. Reasons for that being the energy transition. Some people talk about a greenflation, so energy transition that comes with a price tag. We have labor, shortage of skilled labor, which means that there is some pressure on wages remaining, and we have the tendency of friendshoring, of course, the corporate sector building up redundant supply chains, which means that production costs will stay rather elevated levels. For real estate, that should be good news, actually, because this asset class has kept on its promise to provide investors with a hedge against inflation. So that should not be bad news for real estate.